Folks, my name is Roger Scott, and I'm the Senior Strategist for 𝗧𝗴𝗀. I want to welcome you to the Midweek Roundtable with my usual co-host. His name is 𝗧𝗴𝗀, and he's the Senior Strategist for Joy of the Trade. If you want to contact Jeff, his email is jeff@joyofthetrade.com, and my email is support@marketgeeks.com, and it'll get there very quick if you use that email. Jeff, how are you doing today? How's your week? What's going on with you? What's new?
Excellent. I'm just waiting for our favorite bumbling guy in charge of the Federal Reserve to make up his mind about if there's inflation or no inflation. Is there inflation, Roger?
Inflation? What inflation? I don't see any inflation. Egg prices, inflation. Yeah, I mean it's like I just wish he would just stop peeing on our legs and telling us it's raining. You know?
I hate that so much.
I mean, come on, buddy. There's inflation. I mean, used cars selling for used cars prices commanding higher prices than new cars.
Did you see what 𝗧𝗶𝗺𝗀𝗃, the hedge fund manager out of Texas, said yesterday? He came out and he came out. He's really a sharp guy, like a lot of the things that he says. And he comes out yesterday and he says, real rates are like negative 10% because inflation. He said because inflation right now is running north of 10%, is like 12% or something to that effect. It's double digits, real inflation.
Yeah.
And so real rates is negative 10%. So like, how are you going to sit here and say that you have to buy bonds? How do you have to buy mortgage bonds every month? Riddle me this, Batman. These guys are buying like $15 billion a month of mortgage bonds when people can't even find a house to buy. Kids can't buy a new house that are just starting families. And this guy's buying mortgage bonds to keep the real estate market juiced like it's never been. You tell me. I mean, it's not like a bad thing if you're a home builder. That's why I like the home builders, because it's going to, that's an easy one. That's a low hanging fruit.
Right. Right. Anything. Well, you saw the video. I sent you the video and you said you've already seen it. And folks at home, I'm referring to the Paul Tudor Jones video that, and he said, if the Fed doesn't want to acknowledge it, all in on inflationary play, all in on inflationary play. And I couldn't agree with him more. Yeah. We've been God knows we've been talking about it for 6 months now. I mean, there's nothing new there, but
he's a sharp guy. Paul Tudor Jones is a very sharp guy.
Very dynamic, very brilliant, not just a great analyst, but also a great trader. I can't say enough good things about him.
Great trader.
Yeah, shrewd trader. So what are you, I mean, we've got the Fed announcement in about four hours or so. What do you
we should make that clear, because a lot of times people are watching these videos and they're like, these guys got it, what are they talking about? The Federal, like, you got to understand, by the time this thing is out there, a lot of this information is already going to be decided from the Federal Reserve. So it's just a big meeting. I know they're not going to raise rates until 2023, but they might hint at hinting about tapering at some point, which is huge.
I think ultimately, I think that's what Wall Street is. I don't think anybody's waiting for them to realistically raise rates or lower rates, but I think, or stop, slow down the buying. But I think what Wall Street is expecting is potentially something like, if things continue going down this path, we may slow down over the next 6 months, something to that effect. God knows this guy loves to predict the future more than anybody. I mean, tell me I'm wrong. I mean, we're going to keep rates low till Jesus Christ.
Well, inflation is transitory, but so last time I checked, life was in general a transitory event. So I mean,
yeah, right.
You could apply that term to anything that has a life cycle, right? Transitory.
Right. That's right. So what do you? Okay. What do you think? What is your ultimate? If you had to guess, what are you thinking? What do you think?
I mean, we have to guess. We're going to look. I could look like a fool in a couple of hours, but my guess is that he's not going to hint. He's going to have like the subtlest of hints, and the market's going to gyrate a little bit, but it's not going to be enough. It's not going to be enough of a move. It's going to be like a bulk. It's going to be like not enough of a move in one direction or another to get like a real, that release that everybody's looking for on the upside or the downside. It's going to be like the worst possible outcome for everybody. It's going to be more like life in limbo. He's going to leave us like with suspense until the next one.
Interesting, because one thing, and I got to say that's one thing about Greenspan that I miss the level of suspense he would leave us in. And I mean, this guy has no.
Dude, Greenspan would be at like 3% Fed funds rate right now. What are you talking? I mean, Greenspan would have done an inter-rate hike when he saw chicken wings were going 15% higher. Greenspan doesn't like, he was the best. That guy didn't play this type of thing. He thought about the entire totality of the economy. He wasn't just thinking about, okay, I need to keep the stock market juiced for a few days. Like, he didn't think in those terms.
No. He was the real
free
deal.
markets guy. Free markets guy.
Right. This guy, I don't know about this guy. Anyway, so I think we're going to see an increase of volatility. I think the market needs it, but I want to address the pink elephant in the room, and this is sort of a bearish argument for the stock market and as a whole, which tells me that there is a chance that he may start getting a little dovish on his statements, and I'll tell you why. And this is something that's really bothering me over the last month or so. And don't quote me on the timing, give or take, but over the last month, the number of stocks in the S&P 500 trading above the 50-day moving average went from above 90 percentile to about 60 percentile. Maybe a little lower than 60%.
That's so counterintuitive at like all-time highs.
We're at all-time highs. Yeah. So you have right now. So imagine. I mean, obviously, you. I don't have to explain this to you. You understand this, but I want to give the folks at home the understanding of that. So imagine you're driving a car. The car you're driving it at 50 miles per hour, and it's an 8-cylinder car. That car is still moving 50 miles per hour, but 2 cylinders just broke. That's what's happening, and that's not a good. That's a very bad indication. And what I'm saying is not a theory. I mean, I'm seeing this. I'm seeing the number. It went from 91 or 92 to about 59%, 60%. So that's significant. That is significant.
There are pieces of the market that, we've been talking about commodities for a while, and all of a sudden you had lumber, which was like lock limit up for a month. He had a huge drawdown, a huge pullback. You've seen copper get whacked this week. China came out and said that they're gonna diminish their stockpile. They're gonna sell off some of their stockpile, and there's gonna be a lot of supply of copper on the market. Copper got whacked. Freeport, all these mining companies have been, suffering a little bit. Metals have been suffering. Underneath the hood, things are happening. But this constant flow of money, Roger, is keeping the game going. So that's why you'll see like S&P is up 10 basis points in the day, and everybody's like, oh, nothing, burger. Then you look underneath the hood, and you have these basic material stocks are down 4%. And then you look over at like Apple or whatever, and that's up 1% or 2%. And you're saying to yourself, well, the money is just, it's a wash is what's happening, because this money's flowing in. But what concerns me is that you have this constant flow of money in, Roger. The point that you made where you have less stocks in a technical good way breaking out, they're starting to break down, and you have more sectors starting to break down. And so like this flow is not giving you the same return that it used to. So it's like you're watering a flower with a consistent amount of water, but the flower is not growing at the same rate that it was growing. And that's a bad sign.
Yeah. And when you take that in with the fact that volatility is completely dead, and we really haven't had a major spike in volatility. And when you take this into account with the fact that the next 2 months the next 2 weeks, are supposed to be a fairly bearish period for the stock market. What's that saying? Sell in June and go away. What is buy in June? I don't remember, but something about going away. Like June, generally speaking, June, especially the second part of June, is not historically a very strong part of the market, and it's not a volatile. So I'm getting a little nervous about what I'm seeing right now. And I'm giving you reasons. It's not just because I have a feeling about it. So I'm seeing certain things. I talked to Lance this morning. He also feels a little like the markets are not the rhythm of the market, the typical rhythm of the market that we're used to seeing is not there. And it appears that rubber band is just really stretched out and needs a little break.
Yeah, we're kind of like at halftime, I guess, is a good way to put it, like in a game. Like nothing's really kind of we're waiting for the next leg, right? We're waiting for like a little bit of a correction, which would be good because it would create momentum and it would create a new set. See, what people don't understand about momentum is that once momentum stops, it kind of needs to correct a little bit, reset to get a new leg higher.
Right.
Because legs don't like go infinitely. So you
Right.
need to get in to keep going much higher. You need to have a bit of a reset and a new momentum train start. And
That's
I feel
right.
like we're kind of like at that point where we could use like a quick 5%er, nothing too crazy, a garden variety. You know, historically, typically you get what, 2 to 3, 10% corrections a year in a stock market?
About three on average. Yeah.
Three
Yeah.
on average, right? We have, how many have we, like this?
That's what
That hasn't
that's
happened,
exactly
right?
right. And
So,
we're already halfway through, and last year was last year was
yeah,
right. So it's kind of like
we're due. We're
I wouldn't
due
be
is what we're
surprised.
saying.
I wouldn't be surprised at all. And
Yeah.
also a lot of, the momentum stocks have not been driving the market. A few of them are starting to come back. So I'm thinking maybe this is a time where we see a little cool off in the basic materials, in the industrial stocks,
Yeah.
because of the sensitivity right now that we're seeing. And I think the market is ready to kind of rebalance itself, for lack of a better term. Rebalance
Like
itself.
you need to regenerate. It needs to regenerate itself. It needs to get that new emotion, that new volume, that vigor. There's like a vigor that happens.
Yeah, and another time,
like it's there right now.
No, not at all. Very listless. I think listless is
a great word to describe it. That's a
listless.
great word.
And I think, and it's something else I wanted to ask you about. This is actually kind of interesting. I've been reading a lot of articles about Bitcoin and cryptos in the last couple of weeks.
True.
And I'll tell you, tell me if you, again, I want you to just tell me your honest opinion about this.
No, I will.
A lot. Yeah. That's why I love talking to you, because you don't sugarcoat stuff. I've been seeing a lot more, and I'm talking about the financial market, the newspapers, I've been seeing a lot more people talking about crypto and gold in the same sentences, in the same paragraph.
Tudor the other day, PTJ said I got 5% gold, I got 5% Bitcoin. Yeah,
commodities, but he's not the only one. I've seen a lot of guys, and I mean some serious guys, not some guys on the Reddit forum. I'm talking about players.
It's institutionalized.
What do you make of you think it's getting there? You think it's finally interesting.
Listen, Roger, we've talked about the fact that these countries like El Salvador and Panama have adopted it as legal tender in their countries, which is unprecedented and monumental. It's a very important thing. But the beauty and the big thing about these cryptos is the like sheer mass of liquidity that you can conduct in these things has changed tremendously. If you look back even like 18 months ago, the size of the blocks of the volume, you're seeing like $20 billion of notional Bitcoin risk being traded like in a few blocks. It's trading like water. It's trading like dollar-yen or something now. So that tells me that it's not like an army of Reddit people that are doing it. It tells me that it's like banks, countries, corporate treasuries, people with big size to move. And if you think about what, if you believe halfway, we'll split the difference, that real negative rates are like minus 4% or 5% or something, it makes total sense. What the hell are you going to do with your money? You can't just buy stocks.
No.
At certain valuations, like all the time.
No,
stocks are not what people don't get about stocks too is like single stocks, aside from when the craze are happening, is they're not super liquid. They're not. If you need to pull the trigger on $1 billion of size, you'll crush a stock or you'll kill it. You'll move it against you. Yeah. But if you can do that seamlessly in a crypto, that's pretty cool. There's an advantage.
It is.
Size matters.
Are you noticing a reduction in the ATR and the volatility? Because if that's happening, if usually when liquidity increases, volatility decreases. Are we starting to see it? And I'm only asking you because I am not a crypto expert.
I'm seeing Bitcoin a little bit more stable than the other ones, but I'm still seeing a high level of volatility, not on a day-to-day basis, but you'll still have very violent corrections. So that's why I think it's prudent to be very small, and I'm very small in it. Like that's why when Paul Tudor is like, okay, 5%
Right.
net,
Yeah, that sounds about right.
very sober. That's a prudent thing. So like, you know, if your net worth's $1 million, you could put 50 grand into some crypto.
Sure.
You'll be
Sure.
okay.
That sounds reasonable.
You can absorb a 30%, 40% drawdown and not like, you know, not go mental over it. If you're down 15 G's, it's okay if you got $1 million. But you know, you know, that's what I want people at home. But if you're like YOLO and you go all in on this thing, and I don't know how people do, I know people who are doing this as we speak. For me, that's just like mental. That's like, I personally couldn't withstand those types of drawdowns against my account. I mean, that's the defensive nature of being a trader. We don't like 30% drawdowns. That's why we're constantly like, get me in and get me out of stuff.
Right.
But these guys, they've made peace with it. God
Yeah.
bless them.
Again, good. If you have the stomach for that, hey, what can I say? Good luck to you. I mean, yeah, 5%, treat it like a highly speculative penny stock. That's what
right.
I say.
That's right.
That's my rule. Have it, use it, trade it, but don't go crazy with it. That's what I always say.
And it's a cool, you know, when you own some, the beauty of owning some is you start to figure, like, you know, you start to figure out everything about it. You start to, you know, study the different exchanges, the different wallets, how much it costs to trade, the transaction fees, the gassing fees. You can't really learn something, in my opinion, better than when you do it. So I just started doing it because I was like, let me get involved in this. I'm going to be looking at talking to crypto. I got to have some crypto. So that's my point of view on it. I recommend to everyone out there to try it and get a little bit going. Get a little bit going to get like in the game and to learn, really.
Yeah, I mean, it's much easier the second time you set up a wallet and do all those things and Coinbase, and it's
exactly,
do it, folks. It's much easier. It's like driving a car. If somebody drives you, you'll never learn how to get there. If you drive it yourself,
it's almost too easy, man. It's actually almost too easy. Like you think back of like the olden days when people used to have to walk into like a brokerage house with like, you know, like the house deed worth of paper, like they're closing on a house to open a simple brokerage trading account. Remember the amount of forms people had to disclose? It was ridiculous.
You know, it's interesting.
Guys are just like, do you know how? Yeah, like, can you look up and see that the sky's blue? Yes. Okay, transfer money in. What's your bank?
It's really interesting, Jeff, because for stocks, it was always this many papers, but for commodities in the old days, in the 70s, it was like a postcard. And now it's like double. So it's gotten a little.
Yeah, commodities used to be just like, are you a cowboy? Yes, sir. Okay, you're a big boy.
Sign right here.
Yeah.
Things changed. Right. So let me ask you, speaking of commodities, which is why I brought up commodities. Obviously, with the inflationary pressure, commodities are in play right now. Right. And for those of you at home, don't think when we talk about commodities, this doesn't apply to you as a stock trader. It absolutely does, because every commodity has a underlying ETF that works with it. One that I'm really hot on right now is corn, actually.
Interesting.
Yeah, it's pulling back from a swing high, and the oscillators are telling me some play. Yeah. Are you looking at any particular commodities?
Well, I've been talking about oil a lot, so that's kind of.
I was going to talk about oil. I should have said aside from oil. Are you looking at any commodities?
Any commodities? I'm kind of interested in what's happening in copper right now. I don't think that this move has been particularly good. If it breaks like another 5%, you could really see a run on copper on the downside. So I'm nervous about copper.
And just FYI, and just let me make a full circle out of that. Remember, that'll have a pretty big impact on solar stocks and evergreen renewable energy stocks. So because the price of commodity,
copper is like the truest economic indicator commodity that there is. So that's a big tell. That's also kind of like, it's a red herring for everything else that's happening in the economy. Copper is always looking forward. And if copper's starting to really, fall out of bed, that's telling us that maybe like this economic boom isn't so robust. But this is the thing that people don't understand. And this is the problem that I have with like traditional financial media in general, is that they extrapolate that if you have high copper price, for instance, that means that there's a lot of inflation. Okay, yeah, it could lead to inflation. But then they would say, you see, Powell was right if copper's pulling back. But that's not the point. The point isn't that copper pulled back and now there's no inflation. it's actually going into other commodities. You're seeing other commodities. It's kind of like the stock market. Like we were
Right.
talking
It
about the
flows.
stock market in, like the sector rotation. You see all of a sudden you've got FANG stocks ripping again, right? Like everybody wants FANGs and everybody wants semis. And a month ago, they couldn't get out of these stocks fast enough, right?
Right.
Commodities, the same thing. The inflation just finds a different avenue, the asset inflation. And it's in oil now. And oil's breaking out for real above 70.
Yep.
And Goldman put out a report the other day that said they could see crude at $100 a barrel.
Right.
Now, what do you think? If we see crude at $100 a barrel in August, what's that going to do to the stock market? That's a question for you. What do you think happens to the stock market if we get oil at $100 a barrel? I think it's a net negative, a massive negative.
I think it's a net negative. I think it's a net negative.
It's a huge tax on society. If gasoline is like at $4 a
that's a huge. I think that's going to push. I think that's going to push prices lower, not higher in stocks. Yeah, that's that's a little too. We're going to go from very little to a little too much of a good thing. So, and that is something we have to keep in our minds. And I am glad you told me about that, because I did not see that report from Goldman.
Yeah.
That's very good to know. Very interesting.
They have actually what's weird about the investment banks is you learn the game within the game. Sometimes these guys on stocks, they'll have like an axe to grind because they'll have an investment banking relationship, as you and I know really well. And they'll have like an M&A deal to do down the line, or a secondary or something. So they'll put a little bit of lipstick on the pig and put a nice report out, and everybody fawns over it and buys the stock for 48 hours, right?
Right.
But in commodities, in the macro stuff, in the big asset classes, they don't care about oil. Like they don't have an oil axe to grind. They're positioned with their book, but it's not like they owe this company something.
And they're not going to, and Goldman's not going to drive price of global oil.
Yeah, exactly. So I find that the research that these the big bulge, because like the bulge brackets on the stock, sometimes like you look at that paper, we used to get them on the desk and we would just like delete, like unless there was like a good, arbitrage situation, delete, just some guy saying that he likes like a bank stock, whatever.
Yeah, that is not as nearly as significant.
But when they make big calls on commodities and bonds and stuff, they're very good. They're very good.
You know who else I've noticed is really good with commodities, generally speaking? Prudential.
Bank. For sure. Old school. They have great technical.
Jack 𝗧𝗴𝗀 from came from Prudential Bank. But yeah, Prudential Bank was my first job as for Prudential as an analyst. Cool. Back in 1990. Jeez, going back a long time. Jeff. Before we conclude, I wanted to ask you, any pair trades on your horizon? Anything that's interesting? Anything hot you want to tell folks at home that you're looking at?
Yeah. So, this was a weird pair trade not weird, but this is like a very professional type of trade. I'm actually bullish on the oil stocks. So long XLE as an ETF, and then short USO, which is the crude ETF. Because the thing is that the stocks have lagged the commodity by 40%. 40%, Roger, in a year, which is insane. In 1 year, 40%. It's a 2 standard deviation move. And this is a very mean reverting pair. They always kind of come into parity. And if anything, the stocks trade at a premium and get very expensive if you get a sustained oil rally, which I'm betting on. So I think there could be a huge upside in the stocks. I think you can hedge a little bit of your risk. You don't even have to go to dollar to dollar. I'm net long, so I'd say like 50 cents short for $1 long on that trade. And you can cover your butt in case, 𝗧𝗴𝗀𝗀 does something insane, like starts.
I like this
next month.
I like this idea. This is good. I love the analysis. I love the idea. And Jeff, this is why we have these meetings. Folks at home, this was a great idea. I was just sitting here thinking, wow, this is you thought of it two, 3 steps ahead, which I really like.
Yeah. It's not the type of trade that like a lot of retail guys like, because it's like they want something sexier. They want like, oh, this car is going to beat that car. But this is like the type of trade that like a big bank will put, a couple of $100 million on, because it's tight. The thesis is good. There's statistical arbitrage history data points that you bring into it. And, there's a very tight correlation.
I like it. Folks at home, again, this was a wonderful, wonderful, wonderful session, Jeff. I really appreciate it.
Thank you,
and
Roger.
Folks, if you want to, thank you. If you guys want to reach out to Jeff, go to joyofthetrade.com, or you could reach out to Jeff at joyofthetrade.com. If you want to reach out to me, support@marketgeeks.com. The email will get there faster, or visit Wealth Press. And that way you could visit both Jeff and myself. This was a wonderful, wonderful session. Jeff, I look forward to talking to you next week as usual. Thank you for taking the time today out of your schedule. I know you're a busy, busy guy. Thank you again. And I will talk to you guys next weekend. Bye, everyone.
Have a great week.
Thanks, bud. I'll talk to you soon. Bye.